Hello, 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 everybody. Today, we're going to go over how to do a stop loss and take profit. And this is something that's very necessary because you don't want to lose too much if you do lose a trade, and you don't want to not win a lot and get out of the trade too soon. So, you want to make sure that you have a level playing field, 1-to-1. If you're going to try to get $100 of winning, then only lose $100. Most of the time what I do is, most master traders too, they do 2-to-1. They want to win 2 times as much as they lose. So in this case, we would want to win $200, and the most we want to lose is $100. So let's set up a trade like that. We're going to go to BTC, and I haven't looked at the graph or anything or took a bot trade, but I'm going to go to sell, and I'm going to do a 10 lot trade. That means $10 for every movement. And then we're going to go to protection order right here at the bottom, and we're going to put in a stop loss. So how do we know if we're going to lose $100? Well, I could mess around with this numbers right here, and it will tell me. Let's go. We're on a sale, so we need to go higher. So let's go to 900 here. And now you're going to lose $1,000 here. So let's go to 850. 850, you're going to lose 700. Let's go to 800. 800, you're going to lose $200. Now let's go to take profit, and it's so close. Let's go right here, and we might end up losing this just off the bat on the trade, but we're going to do some higher. Let's go to 900 here, and we're going to go to, it's at 600, so I want to win at about 400. No, let's go 500. And that's about 2 times, a little bit more than 2 times. So I'm going to win 2,700. I'm going to lose 1,200. So then we go send order. We got the take profit. We got the stop loss here. We know what our projected loss and our projected profit is. And we're going to start it up. Let's start the trade. And now our trade is set. We're at $73 losing right now. It went in our direction really fast already. And it says our margin level has breached. Okay, and then we're going to hit OK. And let's see here. And it's moving and grooving. And we're going to have to wait a little while. See, the free margin is actually in negative right now. And that's not a good thing. So we traded way too many lot sizes. 10 lot size on a $10,000 account is way too much. You want to be at about 0.1 lot size for every $1,000 you have. So we should really be doing a trade right here for 1 instead of 10. But I just wanted to show you guys how fast things are moving. So here it goes. It's moving and grooving. We have our stuff set. Where is it at right now? Our current price is at $95,795. And if it goes up to 900, it's at 795. It goes up to 900, then this trade will be over and it'll hit our stop loss. If it goes down to 95,500, because we're on a sale, then we would win that 2,000 something dollars. You could always go back in and modify it by just clicking on the trade like that anywhere on the trade, and then it will pop back up like this real simply. And now it's up. It's going up, so we wanted it to go down, and we're losing $343, but we got it set to where we'll lose 1,253 or 58, right? The other thing you could do is you can get out of the trade whenever you want to. Let's say that it started stalling out, it's not moving as much as it was. You might want to get out. You can hit the X right here and close the position. If you're doing really high lots like this, you might want to just, if you're scalping, you're waiting for it to go on profit and you're closing out. But the thing is, if it starts going the wrong way, you could lose a whole lot of money. And that's why you're always going to want to put a stop loss regardless. Sometimes you don't have to really do a take profit, but when things are moving super fast, you don't want to lose way more than what you were able to lose. And so that's why you're always going to want to set a stop loss. Here it is. It's going back down. We want this to go down. Down, down, down. If it goes up, we're going to lose, and it's going to hit our take profit, our stop loss. If it goes down, which we did a sale, it's going to get to where we're going to win. Let's see what happens here. We're at $400 loss right now. Probably when we start this trade, we're probably in, about a $300 to $400 loss already just starting it because of the spread. And what's the spread? The spread is right here. It's in between these two lines right here. When you buy, you're going to get it at this price. When you sell, you're going to get it at that price. But the market is somewhere in the middle. And, the further, whenever it stops like moving so much, it's like the further and further it gets from your spread. And like right now, if we got in the trade, there would be a big spread. We would be losing. But when it starts getting closer together, these two lines, that's when the spread is at the best and you won't lose that much just getting in the trade. Now we're only down $6 like we see. Now we're up 200. Now we're up $154. Let's say we want to get out. Well, I want to get out at $400. If it goes really fast down, it's going to get us out as a $2,700 profit. But I'm going to get out over $200. So I'm looking here, or you could look right here. All I have to do is close the position. So I want it to go down a little bit further, and I want at least $200 on this trade here. And let's just wait for it to go a little further down. And you can see the top is not moving, but there it is. It's at $281. I'm winning right now. Let's keep it going. We're at $300. We're winning. Let's get out around $400. And you see how my brain keeps on telling me, hey, I need to get out for, okay, that's $570, $600. I'm getting out right there. I got out and I made about $500 on that one right there. And let's look at the trading journal. And on the trading journal, I just won $553 and we're out of that trade, and that's it. Very, very simple, you guys. Very simple to trade this way. And that is a stop loss and take profit.